Hey guys, welcome back. Today we are going to solve a problem from June 2024 direct tax, and this is from the capital gain chapter. There are a lot of amendments happened in the area of capital gains, but there are only few things which affects this question, which is indexation benefit. There is no indexation benefit after 23rd July 2024, but before that there was a indexation benefit. So we are without indexation benefit is simple. We don't need to calculate the indexation calculations and all. We don't need any FOA, any cost of inflation index and all. We just need to deduct the amount of acquisition and improvement from the fair value consideration. We get the total amount related to the gross LTCG. From that, whatever the exemption we can claim, and apart from that value, we have to charge 12.5 percentage tax. If it is with indexation benefit, 20 percentage tax. Okay, we'll quickly solve that problem. Okay, shall we start? The easier method to solve the capital gain problem is to prepare the timeline only. If we prepare the timeline, the problem is over within 5 minutes. Okay, Mr. Kavita, an individual sold an agricultural land for 40 lakhs. Okay, which is on 10th March. We don't need the dates and all. March 24. Okay, March 24, he sold one land, which is fair value consideration is 40 lakh. This is sale price. Okay, this is to 3.6 kilometer aerial distance from the local limits of the municipality, whose population is 6 lakh. If the population is more than 10,000 itself, that is termed as um, urban agricultural land. So this is 6 lakh. So no doubt, so this is urban agricultural land, and this is subject to this is the transfer of asset. The transfer of this agricultural land is subject to taxable conditions. Okay, right. It was acquired on, okay, the acquired date of this agricultural land is on June 14. Cost of acquisition is 18 lakhs, right? Okay, she also sold a vacant land. She sold another vacant land. Okay, she sold another vacant land on which date? Which is on June 23. Okay, for fair value consideration is nothing but the sale price. Okay, and the sale stamp value duty, which is SDV. SDV is how much? 80 lakhs. Guys, SDV is greater. SDV should not be greater than the selling price. So what you have to consider is we have to multiply this with 110 percentage. What it will come? 75 into 110 percentage. This is 82.5. So this is actually crossing the 82.5. Okay, this is actually crossing this value. So we can take this as the selling price itself, no problem. Okay, so rupees 75 lakhs is the selling price, right? Okay, what else is the information was given? The vacant land was obtained as gift from her father on May 13. Okay, which was originally acquired by the father in okay, this was gift May 2013. Okay, gift her father bought on October 2001, which is for 12 lakhs. Okay, cost of acquisition. The fair market value on the date of this time is 40 lakhs. Okay, right. Then Kavita deposited 30 lakhs in section 54 EC. Okay, section 54 EC. She has transferred EC rupees 30 lakhs has been transferred to get the exemption under capital gains. Okay, she has done that. Kavita has done that. Then Kavita, on which date? The date is very important. Within 6 months from the date of transfer of asset is the valid deposit. So 2024 cost of inflation index they have given. Okay, under the Income Tax Act 1961, compute income from capital gains in the hands of Kavita for the assessment year 2024 to 2025. Okay, right. Okay, how many concepts are involved in this? See, gift concept has been involved here, and 54 EC concept has been involved, and agricultural land, sale of urban agricultural land. So we are coming up with this is one of the comprised problem of 3 or 4 concepts itself. Okay, the thing is, he has sold two lands in the year 24 to 25 itself. He has sold, sorry, in the year 23 to 24, he has sold two assets. June one sale has happened, March 24 one sale has happened. Okay, two sales in one problem. Okay, one on June 23, second on 10th March 23 24. Okay, there are two sales, right? So what would be the index cost of, let's find out the index cost of acquisition. 18 lakhs. 18 lakhs divisible by what's the FII for 13 14 15, which is 240, into when it was sold 348, which is 26 lakh 10,000 is the index cost of acquisition. So minus 26 lakh 10,000, the LTCG is 40 lakhs minus 26 10,000, which is 13 lakh 90,000 is the LTCG of the first asset, which is uh, agricultural land, right? Agri land. Okay, this is vacant land. Okay, so this is as per we should calculate the indexed cost of acquisition from the date it was acquired by the previous owner. We should not consider the date which is received as a gift. So this is as per Manjula case. So 12 lakhs divisible by 100 into 348, which is 41 lakh 76,000. Okay, 41 lakh 76,000 minus indexed cost of acquisition 41 lakh 76,000. What amount we get as LTCG, which is 33 lakh 24,000 is the LTCG. So this is LTCG 1, this is LTCG 2, but he has invested 30 lakhs. We have to get the exemption out of this 30 lakhs, no? So first we have to see when this LTCG has occurred. Particulars rupees. LTCG 1, agricultural LTCG. Transfer LTCG is 13 lakh 90,000, which is on which date? Date is March 24. Okay, and the sale was happened in June 23, which is vacant land LTCG, which is rupees 33 lakh 24,000. So we have two LTCGs, but the problem is we can claim exemption for the asset which is asset sold, which is immediately used within 6 months for the 54EC bonds. So the sale was happened, for vacant LTCG sale was happened in June 23, but the EEC bonds were bought on March 24. So it is more than the 6 months, so this is not applicable. This asset is sold on March 24, this is also purchased on March 24, so this we can take, right? So LTCG we can use for exemption as how much is the 13 lakh 90,000 plus 33 24,000, which is 47 lakh 14,000 is the total gross LTCG. Minus exemption. Okay, exemption, how much exemption we can get? Okay, section 54EC bonds, how much is the amount invested? And how much is the LTCG? And 50 lakhs, maximum 50 lakhs limit, statutory limit. Okay, amount invested is 30 lakhs, LTCG is 13.9 lakhs, 50 lakhs, whichever is lower, obviously 13.9 lakh is the lowest amount. So net off will get the taxable LTCG. Guys, that's it. 33 lakhs 24,000 is the taxable ETC. That's it. The problem is over. I hope you guys have understood the problem. The concept is 54 EC bonds is the major concept. Apart from that, everything is fine.